What I uncovered was something so stupidly simple that I literally couldn't believe it at first. I thought there's no way something this basic could be the secret sauce. But then I tested it, and wow, it was like someone had given me X-ray vision into the market. What I'm about to show you is that exact method, refined into what I call the box strategy. It's so simple you could teach it to your 90-year-old grandma in 5 minutes, yet so powerful that it's generated more consistent profits than any complicated system I've ever used. In fact, this strategy is so effective that I've seen complete beginners outperform traders with 10+ years of experience just by following these 3 simple rules. Today, I'm going to share the exact steps with you, and I know this is going to work regardless of what market you're trading. Let me paint a picture of what happened when I finally cracked this code. I get days like this, and this, and this. Consistent winners that most traders can only dream about. But here's the thing, it wasn't always like this. For years, I was that kind of trader who wanted to learn everything. Chart patterns, Fibonacci levels, moving averages, you name it, I was on it. I studied every single indicator I could find like it was my full-time job. Every spare minute spent staring at charts, before work, after work, Sundays, holidays. While my friends were at the beach, I was busy drawing trend lines. And when I finally went to sleep, I dreamed about candlesticks. Literally. But here's the crazy part. The more I studied, the worse I got. Yep, month after month, my trades got uglier. I swear, if I had worked at a burger joint, I'd have made more money, and maybe even gotten a free milkshake. But losing money wasn't even the worst part, because money comes and goes. What really hurt was the time I wasted. Time with 0 results. Time I will never get back. And deep down, I started to feel like an idiot. Like everyone else was getting it except me. I hit a wall. A big, painful wall. And then, one trade. Just one. It wasn't some jackpot move, but it was the trade that started changing everything for me. And in a second, I'll show you exactly what happened. But first, let me tell you what flipped the switch. My mentor once told me, the simpler your strategy, the more confident you'll be. And that's when you start winning. Boom. Instant reality check. I was drowning in too much information. I didn't need more indicators. I needed less noise. So I stripped everything completely clean and focused on this stupidly simple 3-step strategy called the box strategy. Today, I'm going to share with you the exact steps, and I know this is going to work for you regardless of what market you're trading. This strategy is so simple that literally anyone could master it in minutes, because all you need to know is how to draw a box. Seriously, here's your game-changing morning routine. No matter which market you're trading, forex, stocks, crypto, futures, your power move is to pull up yesterday's chart and identify 2 critical price levels, the highest point price reached and the lowest point it touched. Now we create our power rectangle by linking these 2 critical levels. These upper and lower boundaries become your navigation system for the entire session ahead. Here's what happens like clockwork. Once trading begins, price has a magnetic attraction to one of these boundaries. Either it gravitates toward yesterday's peak, our upper fence, or it gets pulled down to yesterday's bottom, our lower fence. Let me show you this example right here. As we can see, the market opened and goes immediately straight to the upper part of the box. Now, I'm gonna be brutally honest with you. When I first started trading, I didn't pay attention to these zones at all. I would just look at this price action and think, wow, the market looks like it's going up. This looks like a beautiful breakout. Higher highs, higher lows. And I would trade that breakout to the upside without hesitation. I would enter the trade right here on the long side, and I would typically put my stop loss just underneath. It looked like a very decent setup with plenty of momentum, right? But here's what would typically happen most of the time. Boom. Got stopped out faster than you can blink. And typically, I would not understand why I was getting stopped out. I mean, there was plenty of momentum. The setup looked perfect. So I would start thinking the market was personally against me, like it was trying to get me specifically. I would end up really frustrated without understanding what was actually happening behind the scenes. But here's the game-changing point. There was key information that I had been missing this whole time. The top of the box, the previous day's high, typically represents the largest amount of sellers and the most committed sellers. So the price will try to consolidate around this zone. And this is where institutional sellers and professional traders will place their sell orders. Unfortunately, we as retail traders will try to buy into the strength exactly where they're unloading their positions around this zone. This leads me to the crucial rules of our strategy. Rule number 1, and this is the most important rule: never go long at the upper boundary. Let me repeat that because this is critical. Stay away from buying at the top of our zone. Here's why this boundary is lethal for long positions. Yesterday's peak represents the exact level where buying enthusiasm completely died out, and this is precisely where the heaviest selling pressure is waiting to unleash on unsuspecting retail traders. Rule number 2, avoid shorting at the lower boundary. The reason for that is simple but powerful. The lower part of the box represents the biggest amount of buyers, institutional buyers, and the most committed buyers. Typically, when the price consolidates and tests this zone, it is going to try to reverse if there are enough buyers around this area. So we're going to flip the script. We want to buy at the low of the box, just like institutional traders are doing, and we want to sell at the high of the box. This is where most retail stops are sitting, and institutional traders know that. They know that retail traders are trading breakouts, and they know the exact support and resistance areas where typically a retail trader like you and I would buy. Another game-changing rule, and this one will save your trading account. You see that box? When we draw through the middle of that box a line, this is our midpoint. Here's the golden rule. Avoid the center zone at all costs. This is absolutely critical, particularly during those first 10 to 20 minutes after market open, because price is hunting for the largest clusters of sellers and buyers. The center of this range is where you'll find the most chaos and random movement, and you don't want to get trapped in these low-quality, unpredictable setups that will stop you out without any logical reason. Okay, so I'm going to extend this box right here so that we can see these premium zones better. Remember what we said. We're right now in the middle of the box. Therefore, we do not have a trade. Instead, I'm going to replay this, and we want to see if one of these premium zones, the top of the box or the bottom of the box, gets tested again. Watch this closely. If the price goes towards one of these areas, as we can see, the price went straight into this zone, to the lower part of the box. This is the area where we want to be observing for a potential long setup. And I'm going to be honest with you, the first time I started doing this, my heart was racing. I was so nervous because, of course, everything I was learning in the past was don't catch the falling knife. The market is going down. The market is going to crash. For a very long time, I was doing it completely wrong. And therefore, it was very difficult for me to have this switch in my brain and start looking for longs around this area. But here's the thing, we're not looking to catch the falling knife. We are going to be looking for a very specific candlestick formation and setup that I'm going to show you in just a moment. This formation is going to give us the idea that there are more buyers stepping in, serious buyers stepping in, wanting to protect this zone. Now let's go ahead and replay to see what's going to happen around this area. As we can see, the price keeps going further down and it looks pretty weak. Lower lows, lower highs right now. Typically, if I see that pattern, I would be really concerned and I would even start shorting. And this is where I would get stopped out and become extremely frustrated, not understanding what's happening. But remember what we discussed. Typically around this premium zone, this is where the biggest amount of buy orders and stop orders are sitting. Institutional traders know that. Therefore, they're going to try to reverse the price further higher. Watch this. You see how the price reversed immediately around this zone and shoots straight up towards the midpoint of the range? And then it's testing the lower part of the box again. And what happens next? It shoots straight into the upper part of the box, breaks out, and goes all the way back down to test this area again. This is exactly the kind of price action that institutional money creates when they're accumulating positions. Let's go into step number 2 because I want to share with you what exactly we're looking for and what is the signal for our entry. I'm going to show you this with 2 live trades that will absolutely blow your mind. Step 2, the confirmation signal plus live trade examples, where the real magic happens. Let's summarize first. Step number 1 is to box in the previous day's high and low whenever you get up in the morning and you're at your computer ready for your trading day. That's exactly what I'm going to do right now. For this demonstration, I'm going to use this pair and this time frame, but you can use any time frame that you like. You can use the 15-minute chart, 1-hour chart, it does not matter. What matters are the premium zones that we're going to box in. Here's my systematic approach. I establish yesterday's high-low parameters, creating my tactical framework. Now, let me draw your attention to something crucial about yesterday's peak action. You see how the price was trying to break out of this zone multiple times? Look here. You see this doji hammer candle? Sellers took over and pushed the price lower. Then we see here a little bit more selling happening, and again, another false breakout followed by a bigger red candlestick and sell-off. And eventually, here again, one more time. So actually 4 attempts by the market to break out, but sellers took complete control each time. Remember what we discussed. This zone, the higher part of the box, represents the biggest amount of sellers and most committed sellers. Therefore, we do not want to be buying at this zone. Instead, as soon as the market opens, I'm going to be observing if the price tests tests this zone for a short entry, or if the price tests the lower part of the box for a long entry. I'm going to hit the replay button now so we can see what happens in real time. Okay. So the market opens and we're heading straight to the upper part of this box. Remember, we're looking for a short entry here. In order for me to short, I want to see here a little bit of rejection. I want to see one green candlestick and one red candlestick, and especially a doji hammer candlestick. This is going to give me the clue that there are more sellers stepping in again, trying to reverse the market and push the market further lower. And that's exactly what we see. You can see here one first green candlestick with a wick on the top, and one red candlestick followed by a little bit of choppy price action, and another wick on the top right here. It slightly broke over our box again, just to pick up everyone else's stops from people who are trying to chase the breakout. And now, as we can see, we have one first red candlestick that is a doji hammer candlestick. So the entry happens as soon as the price starts going below the low here, and our stop loss is going to be placed. Now, I don't want to choke the stop loss too tight, because as we can see, this area has been tested multiple times, and it appears that there is liquidity here. Sellers and institutional traders are grabbing liquidity just to reverse the price lower. So always keep that in mind when you're putting your stop losses. You don't want to have too tight stop losses right exactly at the top, because you might get stopped out for absolutely no reason. So now I'm going to place a short order and we're going to see what happens next. My stop loss can be slightly above the high of this candlestick. In terms of targets, typically I would look at the low here. This is one target you can use for your potential exit. Or you can use this previous day's low where we can see a reversal potential. There are a few ways how you can manage your trade. You can trail your stop, or you can place a take profit order around this zone. In this case, you would be out for a profit as soon as this price level is reached. Watch what unfolds. We get this classic back and forth battle. Bullish candle, bearish candle, bullish candle, bearish candle. This is the market's classic indecision dance. But here's what's beautiful. Even during this chaotic ping pong action, our strategy keeps us protected. As soon as we break below this zone right here, I can move my stop loss to break even so that I'm out of the risk quicker, and so that I don't have to worry if buyers step in and the price reverses. Okay, so the market is breaking down further lower, and I'm going to move my stop loss to exactly where my entry was, slightly below. So I'm out of the risk in case we see more choppiness and the market reverses. I would be out of that trade break even. In terms of take profit, I'm going to move the take profit around this zone and see if we can get filled, because this area looks like it has been tested multiple times, and this would be a very decent risk versus reward type situation. As we can see, I got out of the trade. My take profit was hit, and by the way, this is an average trade in very choppy price action. As we saw, even in these types of difficult days, we can have pretty decent profit if we stick with our rules, which is not buying at the top and not short selling at the bottom. So I'm done for the day. This was pretty decent profit, therefore I don't care what the market does after that. I'm just going to draw my box the next day. Now remember, I entered here with a short and closed around the lows. I'm going to go through the exact same process. I'm going to box in that previous day's high and low, just like that. But as we can see, the situation looks a little bit different now. We broke out of the low this box. This is a question we get asked a lot. What happens when we break out of the box? This is a fantastic example, and I'm going to show you exactly how to trade the scenario. As we can see, we broke out of the low here, and we actually immediately reversed and tested this low again. So as soon as the market opens, I want to see if we're going to test this area as well, and if sellers take control of the situation. Why? Because that's what happened yesterday and the day before. We saw here that there were not enough buyers, and we also saw right here that there were more sellers stepping in. This is why I was shorting successfully. So the plan remains the same. I want to see if this low of yesterday gets tested again. If the price comes around this area, I'm going to be ready to watch for that very specific candlestick formation and hit the short button as well. I'm going to replay and see what happens. As we can see, the market opens and tests straight to this low, this exact area. I'm sticking to my plan. I want to see if we get a retest around this area because this was the previous low, and it looks like the market slightly went above pre-market here, probably stopping everyone out who was short. So I'm going to observe this area carefully. Remember, we're trading in the real market. We're not working with a ruler. Sometimes the price might go slightly above or slightly below before it actually reverses. What we want to do is observe the price action. The market shoots straight into this area, and I want to see now if we get one red candlestick, because this is going to give me the confidence that there are more sellers stepping in around this area again. Remember, this was the low from yesterday, and this is also a resistance area here that has been rejected pre-market. Now we finally have one red candlestick. The entry happens as soon as we take out the low of this first red candlestick. You see here, this was the wick on the top of that candlestick, a perfect doji hammer candlestick, and this happened exactly around this resistance zone. You see, that was the high right here, and this is also exactly the area of yesterday's low of our box. Therefore, I want to go short, and I'm going to hit the sell button right now. Stop loss can be placed slightly above the high. In terms of take profit, you can target the lows of this area and put a take profit order, or you can trail your stop. A lot of times, I prefer to drag my stop loss towards break even, especially if I see a move already developing in my direction. This way, I'm out of the risk and I don't have to worry if the market decides to reverse, because we're in very volatile downtrending price action. I just don't want to get stopped out and turn a winning trade into a losing trade, because honestly, that feels the worst for me personally. We see that we go further lower. If you want, you can also move your stop loss further down here. Now that we have a very decent move to the downside, I'm really going to keep trailing this stop so that I'm out of risk as soon as possible. As we can see, first green candle appears and I got taken out. That was a very nice profit with excellent risk versus reward, actually 4 times my risk. This is how you can use these zones of the box, the previous day's highs and lows, as your area and as your guide. You observe the price action, and yes, sometimes the market will drop below or spike above, but we're always observing what the price action is doing around these areas, and any retests of these areas as well. I hope this all made perfect sense for you. Let me summarize this game-changing strategy.
Okay.
The box strategy complete system. Every morning, draw your box using previous day's highs and lows. Wait for tests. Price will test either top or bottom of the box. Follow the rules. Never buy at the top of the box. Never sell at the bottom of the box. Never trade in the middle. Wait for confirmation. Specific candlestick formations, doji hammer patterns. Enter with precision. Only when price action confirms institutional involvement. Manage like a pro. Move stops to break even. Trail profits. Respect risk-reward ratios. Thank you for watching, and I cannot wait to see you guys back here on our channel again.